In this video, we'll be taking a look at gold, crude oil, and EUR-USD to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So this is a gold chart on a 1 hour time frame, still in a very solid bullish trend. And I know you may be asking what these lines are for. So if we get rid of this line over here, you can see that we've had a very massive consolidation over the last few weeks with a good breakout over this price level on the 2nd of June, as the case may be. Right now, we seem to be retesting this breakout, right, this trend line, which could signify that we see a bounce, sending price higher in continuation of the bullish trend. So the previous lines we had on the screen, so over here, this is as a result of a rising wedge, right? So excuse me, so even if we had this massive bullish breakout from this trend, it went on to create a structure that's known as a rising wedge, with price creating higher highs, higher lows, but getting sloped or slant, creating a closer end at the end of the pattern. So this is known as a rising wedge. So from the rising wedge, we had a good bearish breakout. So this may lead you to believe that we're likely going to go lower, which means holding your short straight positions if you're in anyone currently looking for an opportunity for a bounce up to the upside. So this is possible. It is highly possible, highly likely that this is going to happen. So just to mark this out on the chart, this would be like, taking out this area of value like this and waiting for price to come all the way down into this area of value, look for an opportunity to go long before we start heading higher. So this is my first bullish case scenario. So first bullish case scenario will be waiting for price to come into this area of value, giving us some sort of a bounce followed by a pattern to signify a bullish continuation before we go higher, right? So if this happens, my entry is going to be immediately after the break of the pattern that's formed after a bounce, right? I know that sounded complicated. So entry is going to be probably around this price level. Then stop loss is going to be underneath the consolidation, this is the breakout, or underneath the bounce. Take profit target, first one is going to be around its highs, second one around these highs, and third one around these highs. So if you still have more positions, you can hold them as we go higher, right? So if this happens, that means this trend line over here will be invalidated, so we wouldn't have to watch out for that trend line anymore if this happens. So that's the reason for the rising wedge. So that's my first case scenario. Mind you, I won't be going short. I didn't go short last week after this break because I do think, or I have a strong feeling, that this trend line over here is going to hold, and we're just coming down here for a retest before we bounce up, which we'll be discussing as we move forward with this video. So getting rid of these lines, for example, take rid of this, get rid of this and this as well. Now the second bullish case scenario, the reason I'm talking about bullish cases is because we are clearly still in a bullish trend, and I don't want to take any risk going short because gold is highly volatile right now. Anything could happen, and if anything happens to tilt gold towards the trend, towards current trend, which is bullish, then we could see price turn bullish real quick and real fast. That's the reason why I'm staying with a bullish thesis, not trying to go short. That's just strictly because the trend is currently bullish and gold is currently volatile, and you'll be at the favor of the market if you trade in line with the trend. So next bullish case scenario will be waiting to see what our price reacts to this trend line. Do we get a bounce or do we break below? So if we get a bounce, we're watching about something like this, higher lows and higher like this, something like this. So if this happens, then your entry could be the break of this pattern. So after the bounce, so there's going to be a small pattern formed, right, to confirm the bounce of this trend line. Then that's where, or above that breakout or above that pattern, so where you're going to pick your entry to go long. Stop loss is going to be underneath the higher low, and your take profit target, as we explained earlier, first one here and second one here, right? Mind you, the best trade opportunity in my opinion would be hoping that price gets into this area of value like this, followed by a reversal, a consolidation before we go higher. So this is going to be the best trade opportunity in my opinion, seeing price coming to this area of value, because this area of value will coincide with this moving average, and if you sorry, with this trend line. And if you pull up your 200 EMA and SMA and you go further to the 6 hours chart, for example, you would see that the moving average aligns perfectly with this area of value, right? So the moving average on the 6 hours time frame, 200 EMA and SMA on the 6 hours time frame aligns perfectly with this area of value, coincides with this trend line, and would give us a solid, trade opportunity if we do come into this area of value looking for a bounce to the upside, right? While for a sell trade opportunity, the only way I will be considering going short is if we come all the way down into this area of value, which will mean into this moving average, consolidate a little, and then get a bearish breakout to the downside. This is going to be my confirmation to go short, because then we'll be taking out this area of value, taking out these moving averages, also taking out this trend line. Massive confluence, good breakout would give us a solid opportunity to go short. That's the only way I go short on this go chart right now. Entry is going to be immediately after the breakout. Stop loss above the consolidation led to the breakout. Take profit target. First one is going to be around these lows over here like this. Second one, if we keep falling, it's going to be around these lows. This is my thesis and my bearish case scenario for gold. If this doesn't happen, I'm going to remain bullish, because clearly we are still trading above the moving average on the 6 hours time frame, which is a very, very big deal. So now for a bearish trade opportunity, another potential way to pick out a take profit target is going as high as the 1 hour 1 day time frame. So if you go to the 1 day time frame, you can see that the moving average, so the 200 EMA and SMA, are still well off below the current market price. So we could see price dumping all the way down to these price levels before we maybe get a local low and price resumes its uptrend, right? So this is something to pay attention to if you intend to go short on gold, right? I hope this makes sense. And this is briefly for this week's analysis on gold. If you have questions, please leave your thoughts in the comment section down below. Let me know if you have the same setup as I do, or if you think I'm right or wrong. Leave those thoughts in the comment section down below. Moving on briefly, we'll be talking about crude oil. So crude oil, we've been ranging within this area of value, this area of resistance and support for, let's see, 3 weeks now, as the case maybe 3 to 4 weeks now, and we seem to have had a very good bullish breakout from this area of resistance. Now, do we keep going higher or do we go lower, right? So I still do think the price of crude oil will likely go lower over the long term, because United States is keen on keeping oil prices lower, keeping energy prices lower, which means there's going to be pressures on OPEC to increase supply. But as I came across some fundamentals last week, I think OPEC is going to be increasing cutting supply over the coming weeks, which would indirectly affect the price of crude oil, leading it to higher prices. So right now, forget about the fundamentals. Let's just stick with the price action. We can see our chart. Right now, we seem to be trading around this area of resistance. So this is a good area of resistance. For me to go long, going long at the breakout would have been a good decision, right? But for me, I would want to see price retesting this area of value, right? Retesting the resistance level that just got broken out, consolidate between these levels, and give us another bullish breakout to the upside. This would be a confirmation for me to go long, right? So entry is going to be above this consolidation, after the breakout from the consolidation. Stop loss is going to be underneath the lows, so underneath the consolidation list of the breakout. Take profit target is going to be around this place. So first take profit target here, second one around this place, and third one around these highs. This is how I'm going to trade crude oil. I know on a long-term time frame, so in the daily time frame, this area is seen as a solid area of support which got broken through, right? So right now, that's the reason I'm waiting for more confirmation before I jump into a long position on crude oil. Mind you, if you go to the higher time frame, let's say 6 hours time frame, for example, we are still clearly in a bearish trend, but that doesn't mean price can't go up and down. So if this happens, so we get a consolidation between this area of resistance and the current price level with a good bullish breakout, then that will be a confirmation for me to go long, aiming for this price target. Mind you, even if price goes all the way to these highs, the bearish trend would still be intact because that will simply be coming to this high. Or if we do come here, this will mean the bearish trend is still intact because we're simply going to create a lower highs, right? So that's it briefly for crude oil. I don't see any reason why you want to go short right now because the chart doesn't scream go short right now. So if this changes as the week progresses, then I'm going to share my thoughts as well on new outcomes of the market. But for now, I'm going to look for opportunities to go long. That includes, or that's equates to waiting for a good consolidation over here before we get a good breakout to the upside in continuation of this first movement above this area of resistance. That's it briefly for crude oil. Lastly, we're talking about EUR-USD. So EUR-USD a bit tricky. I really didn't want to talk about this. So this is my quick access to quick trades. So I'm going to close this off. So this looks a bit tricky for EUR-USD, and I really don't trade currency pairs, at least not right now. I believe you all know that. But we seem to have had a very good movement all the way from these lows to current price levels, and now the structure we can see on EUR-USD doesn't seem to be authentic, right? It doesn't seem to give us a defined structure for a an opportunity to go long, right? So last week I took this area of resistance. I'm going to explain what I mean. I took this area of resistance, which seemed like a very good area of value, but you can see price went above and came across below again. Before you know, we went above. Now we're trading below. So this area of value doesn't seem to be a solid one right now. And as you can see, every area of value doesn't seem to quite cut it. So if you are taking this resistance, for example, cutting across these highs, right? So cutting across these highs, you see we broke through, we cut across again. If you took it around these highs, see we broke through. Now it seems like a retest, but this movement over here is too shallow to tell what the outcome is going to be, if this is the high we should be working with, or if this should be the high we should be working with, or this one. So right now, EUR-USD system undecisive. I would be staying away from this if I were you. So I'm just reviewing this chart to let you know about my thoughts on EUR-USD. I'll be staying away if I were you, waiting for a better price action, a clearer price action to show us clearly where the market is headed. Though the trend is still bullish, trend is still bullish, also means we could come all the way down to this trend line, consolidate a little, and get a breakout into this area of value before we keep going higher again. So this could totally happen. If this happens, you may want to go short, but another reason why you should be careful about going short is if we come to this trend line, consolidate, we break out, we could get stopped at this area of value before we pop up again, right? So if you take a look, something here, right? So this area of value could stop us from going lower because we're still in a bullish trend. Anything could pop price back up. So that's just the reason why I'm staying away from EUR-USD right now. Also, the same thing goes with GBP-USD, right? So many, undecisive pattern on chart right now where you decide to go short, it backfires, excuse me. You decide to go long, it also backfires. So you should be careful trading EUR-USD right now. Watch out for proper price action before you pick your entries. And if I were you, I would just stick with gold and crude oil because those two charts looks cleaner and clearer right now in my opinion. And if you get good trades on gold or crude oil, that should be enough for you to make enough profit or decent profit for the week. That's it from me this week, guys. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you have questions, also leave those thoughts in the comment section down below. That's it from me, guys. See you next week.